Hello all, I hope you are doing well in these, and I'm still going to use the word unprecedented because it is so appropriate, these unprecedented times. Welcome to the Fintech Finance Virtual Arena where we're hosting you today. Coming to you from the UK with Lockdown 2 Electric Boogaloo. Today we're going to be talking about the future of Fintech, and I'm joined by Alex from Tribe. How are you doing today, Alex?
Yeah, hi, I'm good, thank you very much. Enjoying the last of the sun and the last of the pre-lockdown, so yeah, having a good time.
Excellent, excellent. And also joining me is David from 11FS. How are you doing today, David?
Yeah, really good, thank you. I'm very much getting used to this sort of working from home malarkey, so I'm pretty comfortable now.
Well, last time I think I saw you, David, was in January, and we were talking about predictions for 2020.
Yeah, I don't think we ever had like global pandemic on the horizon, did we? But it was at the Bill and Melinda Gates Foundation that have been talking about this for the last couple of years, but we were way off, weren't we?
Right, well, let's kind of go straight into it. Now, I want to talk first of all what I almost refer to as the status quo, which is post-financial crisis. What was, from your guys' perspective, what's the defining characteristics of the fintech industry? Because that was kind of almost the birth of it, the status quo. What, from your perspective, was the kind of the baseline, so to speak? Alex, did you want to kick us off with this?
Yeah, I think it fundamentally started with a distrust of the financial service industry as a whole. You know, the collapse in 2008 actually meant that there were a lot of very smart people that had seen the inside of financial services and the inside of a lot of industries and had the opportunity, like I don't want to make it necessarily just a negative, the opportunity to go and build some really cool stuff. And actually, this was the sort of kick off the side of the cliff that meant they had the opportunity to do it. So I'm not sure it's changed much. I just think we've now evolved from, you know, a smaller number of people to a large number of people at companies trying to build some really cool shit, really.
Excellent. David, did you want to weigh in on this, especially with the movie?
I mean, I was going to say, I think we did some good prep for this one, right? There was 9 months of work and an hour-long documentary for anybody who wants to go and catch up on that. But I think it's interesting. I think there was a real sort of confluence of forces. You know, as Alex was saying, really, I think the apathy from customers of really differentiating big bank from big bank, you know, the blue one or the green one or the red one, really the offering wasn't very different. And actually they were taking pretty sort of monopolistic kind of approaches to, you know, my product's just slightly better than yours or my rate's slightly better than yours. And people really wanted brands that they believed in, that they could trust with something that arguably most people on the street are terrible at understanding. You know, financial services is still a wash with acronyms that people just don't understand. So I think that sort of trust piece was such a major part in it, given everything that had happened in the financial crisis. But I think we've always sort of said this is the catalyst for it really was the regulatory change and the approach that the PRA, the FCA, and even the Bank of England really took to going, you know what, like if these big players are just going to try and dominate the market, we need to create competition. And we've seen that, you know, play out very similarly in Hong Kong and Singapore, and you know, even now in terms of places like the Middle East, actually the regulator is playing such a significant agenda on the innovation space because they're actually encouraging competition rather than just protecting the incumbents.
I actually think that's a really important point. You know, like we bash regulators a lot for being relatively constricting in terms of what they try and do with the industry. But if you think 2008 to today, we've had multiple payment services directives, we've had GDPR just in UK, Europe, right? And actually the attitude of the regulation has changed to be promoting innovation as opposed to restricting it. And I think actually we're very quick to say that the regulators are hindering our progress. But to David's point now, I think actually we're probably quite lucky to have some sort of forward-thinking regulators in different markets.
Completely agree.
Looking at some of the particularly the challenger banks, I remember again 10 years ago. I remember the first time I heard about Atom Bank, I was like, this is phenomenal. This is something new. And even thinking further back to that, you had the likes of Smile, Egg was Egg one. That's good. But they didn't really have that foothold. And then another bunch that came through was when the likes of Tesco and Sainsbury's were all announcing they're moving into financial services. That was almost kind of the first wave of challengers. Looking at where we are now, and there's a fair few even outlandish ones like the U account. There's so many out there. It's just absolutely exploded. How would you describe the industry today I'll bring up the pandemic. How would you describe the industry today in terms of the fact we are now in a pandemic? We have lost some banks along the way compared to where we were 10 years ago. David, do you want to kick that off?
Yeah, I mean, look, choice. People have greater choice than ever, right? You can choose to be with various different organisations, and actually, we're starting to see, I think, the challenger banks kind of fight the big banks on their own territory to a certain degree. I mean, Starling, you kind of can't move for Starling adverts everywhere right now, right? So, and the more those challengers move into that mainstream with above the line presences, I mean, that's all really a brand is, right? You know, the reason Lloyd's have got a bigger brand than Monzo does is they've spent literally gazillions of money above the line for the last 100 years to establish that brand. So Starling doing that, Revolut are still kind of going strong. I think this is a difficult period for the challenges. If you build a product, and most of the fintechs have built a product on high touch engagement, and in a period where, I mean, I barely know where my wallet is now because I'm just not leaving the house very frequently with everything that's happening with COVID, then payments is happening so infrequently. Mobile payments, I'm not paying with my mobile anything. I'm not using contactless. I'm just not spending money in the same way I was before. So the impact to the fintech scene, I think, is really, really significant in the B2C sense. I think broader than that, I think actually there's some real positives though. I don't want this all to all be doom and gloom. I think there's definitely impact on the B2C sense, but the impact that the B2C, the impact Monzo and Starling and Revolut have had on HSBC, Barclays and Lloyd's isn't just about, are they taking customers? It's the fact that their boards operating and their senior executives are operating in a fundamentally different way because of that pressure that actually came from those fintech players. Because while none of them needed to change, nobody changed. And while we had, Ali, 2-3 years ago, we had every bank come out and say they were a technology company, right? I think they now realise that they're not. Not that they don't want to be. They want to be good at technology, but fundamentally they're a financial services organisation that's terrible at technology. And actually, almost, and we say this a lot. Every 10-step program starts with somebody really admitting that there's a problem, right? And I think the big banks now have really admitted that. From an OPEX perspective, their technology is just so out of kilter with the realities of today that there is significant changes that are really, really, really needed. So while I think the impact will dwindle a little bit with customer numbers and impact, we shouldn't shy away from the fact that fintech has had already a huge impact on financial services, even if it's not that the FT or the Times believe it.
The Times especially.
Absolutely.
Yeah, I can't disagree with any of that, really. A pretty succinct answer. I think the sort of levelling up of financial services as a whole is something that we should be grateful for as opposed to sort of ignore. I think people are starting to also realise where their strengths lie. So challenger banks recognise that their high-touch models are what they're used for. Banks, you look at the Marion at NatWest or whatever, and they're actually focusing on how they can deliver their core product better. The disintermediation is perceived as a complete threat, but if the banks understand it and use it wisely, it doesn't have to be, because there's still a trust discussion to be had in financial services, and I don't actually think we'll ever shy away from that. As long as there is people putting their money somewhere, they want to know that it's safe. It's why digitalized central currencies will take some time to become mainstream, right? It's not going to be overnight that people move from cash to card. I think it's like 13 years for contactless to become a proper product. I'm not sure that we're going to move away from core banking infrastructure and products overnight. I just think we're lucky that we've had those niches within the different subsets of banking sort of exposed and grown on. So it's not just now one provider providing 30 products, it's 30 providers providing one really good product.
Yeah, I mean, arguably the fintech scene and the change from a regulatory perspective has opened the door to the big sharks on the horizon, which is the Googles and the Facebooks and the Amazons, right? Because Monzo's not making money, or Starling's only got X million customers or whatever, then actually like Google and Apple and these guys who've got much bigger brands and cast a much broader shadow across the industry, potentially can have so much bigger impact now that pretty much anybody can get into financial services without actually having to be regulated.
Do you think, I realise I'm not the one supposed to be answering the questions really, but I'm going to go for it anyway. Like, I think the other thing I think about that we were talking about internally is whether Google and Amazon and the like actually want to become a bank. Like if you look at Brett King's book, it's a couple of years old now, right? And it's everywhere a bank other than being a bank. And it's about, that's definitely the wrong quote, but we'll go with it anyway. It's about, they have all of the upside in the transaction data, in the consumer touch points without any of the exposure. And for me, if like you running your business or trying to get started in it, like if we could have all of the economic upside without any of the downside, like that would be, the golden goose.
Yeah, I mean, absolutely. I mean, Google is a good example. I mean, their whole mantra is like organizing the world's data, right? So do they want to be regulated? Probably not. But there's a hell of a lot of data in financial services that can enrich other things. And I think this is where, particularly when we start getting to the sort of embedded finance piece, gone are the days where you go to the bank to do the bank thing. Like actually people increasingly just want convenience. Therefore, I've used PayPal for like 10 years just because I'm lazy. Do you know what I mean? Like that button next to the thing that I'm going to buy, like, yes, like instead of finding my wallet wherever that is, so, putting loans where loans is necessary or mortgages where mortgages is necessary. And that really becomes interesting because I think at that point, then the sort of distributed world that financial services really sort of moves to, I think that power dynamic in those big organizations and the people, I mean, this is, manufacturing and distribution playing itself out in financial services, really, isn't it? It's do the people who have a big enough community, whether it's Amazon introducing that button in like not just Amazon stores but other places, are people going to use that? Probably. In fact, millions of people already are, right? Apple Pay, well, why would people trust Apple Pay? It'll never take off. Because it's easier, like, so people do it. Like inherently, I think people often forget is like the general public are just lazy. We are lazy people, like we just are. Like the thing with the least amount of friction that makes it easy enough for me to do the thing that I want to do, really for me, I think always wins, really.
I think that coming back to that 2008 question, that's what's changed. Financial services is not just about trust, right? It's about convenience and how I can get to that embedded finance perspective. All I want to do is buy my next pair of basketball trainers. I don't really care about the process, not me obviously, but David, but I don't really care about what that looks like or how I go about it. I just want it to be done because I want my trainers. I don't care about how I get there. And actually now, I have my underlying bank account, I have my PayPal, I have my phone. My trust is almost secondary to the convenience of getting the job done.
I think it's interesting as well because I think what we're seeing is e-commerce moving up and down the value chain, because essentially, I mean, to your point with something like an Amazon, like actually, I don't really know which one of the 3 credit cards that I've actually got at Amazon. Like, do you know what I mean? It's like I've no idea. So, but I know when I press that Amazon button, all of the fulfillment, everything is done really well. Like Amazon moving down that stack and into that financial services space and giving me 3-4% cash back. Why would I not do that? You know what I mean? So the stranglehold that, I mean, universal banking as a principle was predicated on cross-sell and upsell, right? It's like we have primacy of customer relationship. If I can sell you, I think it was 2.3, 2.4 products on average, across it, then this whole system works from a profitability perspective. But in a world where actually, as you said earlier on, Alex, like the slices have been sort of disintermediated, and now we're seeing this sort of rebundling of financial services through other providers, whether it's an Amazon or players like Snoop kind of like provoking me into moving and making it really easy for me to do these things. Then for me, that's the really scary thing, because I mean, whenever we've seen this play out in other industries, whether it's, I mean, mobile network operators is always a great example, because it's like, I mean, I just don't care what that logo is in the corner of my iPhone now. I just care that I have an iPhone. So long as they've sort of commoditized themselves into providing me with data and providing me with coverage, which every one of them does, then it doesn't really matter. But the challenge, I think, for financial services is like when you're expecting high margins and you're expecting to expand your horizons, they're only getting smaller. They're getting squeezed on efficiencies in terms of their cost to serve. They're getting squeezed on the margins that they can charge people, because essentially there's more competitors in the market. Financial services has become, no shit, right? You know, the regulator made it so much easier to create competition. There is more competition than ever. So from a customer perspective, it's the best time probably to be getting into banking. If you're, 18 and you're just kind of opening a bank account, then you've got a range of choice from people. And I think if you fast forward, 10, 15 years in the future, then we'll be in a situation where, the things that were challenger banks now are just banks then. People will just be picking, is it a Starling or a HSBC one? They're exactly the same thing.
Let's take that thought though of the future. I kind of wanted to explore. I mean, it's obviously what do you think is going to be in the future, rather than look at it from that perspective. David and Alex in 2030 are sending a message back to you guys today to kind of try and condense where they think the industry is going to kind of help you plan for the future. What do you think is going to be? What do you think you would say to yourself? Do you think you'd say banks are going to be dumb pipes, so focus on the front end? What are some of the things that you think would transpire to be true?
I think I'd be saying to myself, grow up. You're like 39. Why have you got an Atari in your thing? Like, do you know what I mean? Like, and I know you're going to send me this message, Ali. Like, I know what you're like. So, like, I know I'll get that DM in 30 years' time, and you'll be like, dude, like you said. So, honestly, I think we're the quote around the future is here. It's just not evenly distributed. I think it all sort of comes with these things. And actually, I think this is what we're seeing play out. So, for me, like 30 years from now, banking, particularly in the retail banking space, is fully automated. Like, I think, why are we asking people on the street who are not really au fait with actually financial terms and how financial services works to make major decisions around that will fundamentally affect their well-being for the rest of their lives? Like, why are we doing that? Like, there are people who are really good at that, and there are algorithms now who are amazingly good at doing that at real scale. So I think in the retail sense, it's essentially the equivalent of a digital version of what wealth management looks like today. There will be algorithms that are really looking after your finances, making decisions on your behalf, and ensuring that you're always on the best product and the best deal to maximize the revenue that you create as an individual in terms of your salary, and turning that into the best possible outcome that you can create. For me, I think that's inevitably where we're going, is automation.
Yeah, I can't really argue with any of that. I think the interesting thing is that if you'd have asked in 2010 what 2020 would bring, we would have all been wrong. Open banking wasn't really a thing, and actually the primary thing I'd probably tell myself is you don't have a clue, so just enjoy it and iterate with the times. But I do think, to David's point around automation, you look at things like machine learning, artificial intelligence. I think it's been a word on a slide, as opposed to actually being utilized. You look at like GTP3 earlier this year and what that's done, and I think so. I was reading some stuff on that, and Microsoft released one a few months earlier that had 17 billion parameters in it, and it was sub 10% of what GTP3 could do. And I think if you think about what that brings in terms of true functionality, like A, that shit's scary and we need to regulate it, but B, it's a great opportunity to see actually what's going to happen with technology. So I think David's right, it's automation, but it's smart automation. It's not Amazon or Tesla putting a logistics process in line and making it a bit easier and cheaper to buy a car. It's actually the fundamentals of how we react to the financial service underneath that will be smarter and more technologically focused.
We got to talk a little bit about the gaffers though a bit more, because Amazon and Bezonomics and that AI flywheel is just getting faster and faster, and it is pretty unstoppable, especially in the B2B space with AWS, but also the business services that Amazon.com offers. I personally, every time a monopoly appears, then almost organically, lots of small ones, the monopoly gets comfortable, then lots of small businesses appear and start chipping away at it. Do you think moving forward we're going to start to see more startups, more fintech startups entering the space, or is there going to be a lot more consolidation?
I'm not sure we've seen, and look, I don't think necessarily big companies being successful is a bad thing, depending on the big companies, but I don't think we've really seen dominance like this before. Because I think if you particularly in the financial services sector, if you look at the dominance, it's very much regional. Do you know what I mean? Like Bank of America is a big deal in America. Like in the UK, people are like, never heard of them. Are they like the local branch of the Bank of England or something? I don't know.
The colonial branch.
Exactly, yeah. It's like a heritage thing, you know. So I think the scale in which Google and Apple and Amazon have dominance is, I think, unprecedented, to use your word. I don't know if we're keeping a check on the amount of times that we're saying that word, but I think it's going to get pretty high. Thing. Is it? Okay. But that scale of dominance comes with huge amounts of ability to protect yourself, because that scale and that multi-geography balancing of risk and business opportunity and wins and losses, I think protects them in a way that we've never really sort of seen before. It is interesting, your point on the sort of speed of innovation and speed of change from a machine learning AI. Algorithms are getting smarter and smarter and smarter. Like we now trust them to drive our cars, and there are machines doing surgery. Like these things are advancing in such a huge way, and we're trusting them with, don't run over that kid at the stop sign, but we're not employing any of that in financial services. And it's because of how the bank's business models are set up fundamentally. That's the scary thing about it. And that, I think, Alex, to the questions that we were sort of answering a second ago and the sort of train of thought, I think that's why we've seen resistance, not because we can't do it, but because actually it fundamentally breaks the business models of the banks. If you're a big incumbent bank, you want people to forget that they've got like that shitty rate on their ISA and it's kind of dropped out, because that's how you make money. Or they want you to go into debt because essentially their loan and the payments and blah blah, or they want you to go into your own overdraft. That is the sort of punitive side of, really, particularly in the retail banking side of things. And that's where I actually think it opens up really dramatically to over-the-top players. I don't mean over-the-top like flamboyant. I mean like over-the-top like, their ability to sit on top of financial services. And I think nobody's better placed than that, than the Googles, than the Amazons, than those big players who I trust more than any bank on the planet.
I'd like just an example on that. So my energy bill came in at 200 quid last month. I was livid. And I was like, my wife has left all the radiators on. I don't know what the hell she's been doing, and it just turned out I'd come to the end of my 2-year fix, and they hadn't told me about it. They hadn't done any sort of outreach to say, do you want to stay? And you know what? Like I would never use them again now, because, and I do think that will transition into financial services as we become to that point of switching and sort of midware or over the top products. We're going to recognize we as the consumer are empowered to make the choice. I think historically you had BT broadband, you had Sky, or you had Eon or whatever it was, Thames Water, not obviously in Norwich, but down here in the south. But I think now I know I've got 5 options for my energy. I can go to Octopus to get greener energy. And I think the opportunity for us all to make that personal choice is just so much better. And therefore, we're obviously in a luxurious position where we sit every day and we kind of live and breathe it. So we're probably a year, 2 years ahead of general society. But you've got to think they're catching up, because everyone just gets so pissed off with being treated badly all the time.
It is, but it's. I mean, look at any organisation that's gone, any gigantic organisation that's been really successful that has then gone pop. The Blockbusters, the Kodaks, the players who look like they're going to be dominant for a really long period of time. It's the ones that they just can't let go of that business model. Like they can't let go of like videos in a store, or like we're chemists, not technologists. It's we've gone from financial services to evolutionary principles really quickly, but like evolution is just like adapting to your circumstances, right? Adapting to the environment that you play within. The world has shifted dramatically. And really, since 2008, that's what banks have been sort of clambering to keep up with, is like, oh shit, like cloud's a thing, and like, what's this internet stuff? And, mobiles are a thing. And like, so it's a constant sense of panic. And actually, for organizations that are sort of born into this world, born into this very different digital space, then actually they're approaching it in a very different way, because this is all opportunity, right? If you're a gigantic incumbent, slow-moving, high-cost company, then startups are just sort of sitting around the corner licking their lips, right? And that's really where fintech has been for a big space. But I don't think it's just the financial services players either. I think if you look, Ali, I know me and you've talked about this one a lot before, but banks aren't all to blame in this. Banks are in the situation that they're in because of the people who have been advising them to get into this situation. You know, it's like, I know in the UK, we went through a period of like getting sick of consultants and advisors in terms of, the government and everything that sort of come with it. But, I think some of the big technology companies that have been supporting financial services, the big consultancy companies that have been supporting them really needs to take some accountability, because, if you're quite happy for the next 4 years of your client to go into obscurity because you're, digitizing them into meeting your targets, then, we really shouldn't be that surprised that the industry is where it's at,
Yeah, I agree. I think just on aside from financial services, that's why I love what Disney have done with their organization structure. Like the reshift, this is massively off topic, but the reshift into streaming focuses, and they sort of created pods with it, even their senior management team that then disseminate down. Like that's a big corporation recognizing that they've got to get fuck on with this if they're going to survive and be relevant. And I think that's such a good example.
Well, and I reckon between the three of us, we've all got Disney Plus, right?
Oh, absolutely. That Pixar acquisition, it wasn't the acquisition of the asset, it was the acquisition of the culture. That to me is the perfect example of a big organisation acquiring what was at the time a small organisation, and that culture just filtering through. Well, we're not off topic. This is what it's all comes down to.
But how many times have we seen that? We've seen that in financial services, though, right? We've seen people kind of attempt to make the BBVA. I mean, BBVA are like the poster child for transformation and getting digital. But I mean, they changed the entirety of their board in, what was it, 2001, 2002? And still, they're not massively ahead of the pack in terms of what they're doing. Like they acquired Simple, they acquired Holvi, they did all these different things. But I think the change that I've really sort of seen in the last couple of years is people realizing what they're good at and what they're not good at. That, like I say, that back to that point where people were like, we're a gigantic technology company. It's like, no, you're not. No, you're not. You're not that. Why are you saying that publicly? So actually, when you look at the things that they're now going, look, we're not good at this. They're now partnering with gigantic organizations. We've seen Deutsche Bank 3 years ago go, we're a technology company. Now they're partnering with Google to come in and sort out their technology. And that's like, that for me is the point that we need to be, which is like realism on what they are good at and what they're bad at, and bringing people in who are really good at the things that they're bad at. That's just common sense, isn't it?
Yes, it's a bit worrying that it's taken us this long to get to common sense, isn't it?
Yeah, but if you've got enough money, you can stave away common sense for a really long period of time. Look at Donald Trump; like he's done a great job for 4 years to stave away common sense.
Last thing I want to bring up, and I kind of want to take that point and run with it, is we did an interview with a neobank in Iceland called Indo Services, and we had an incredibly honest, frank discussion where he said, any bank saying that they're a technology company, there's a slight level of arrogance there. We're a bank. I don't want to be dealing with the cloud. I don't want to be dealing with the technology. I want to focus on one thing, just delivering the best banking services to my customers as possible. We're bankers. We should be focusing on banking. And everything else, come organisations like Tribe, he just focuses on best-in-class or third-party services, and that ecosystem seems to be working pretty well for those guys. Is that the future? Are banks going to be just that ecosystem and just focusing on that one thing?
Yeah, I mean, I used to work for an Icelandic bank actually, and they're great people, straight up, and they don't bullshit you, right? It is what it is. I think from an ecosystem perspective, we're all recognizing what we're good at, and we're all trying to focus on that. We as a business have built a lot of product laterally, and now we're recognizing that we've probably gone enough one way, and now we need to go that way and really dig into the detail. And that's probably a learning that we've come across as a young business. But actually, I think what we'll find is that banks will recognize that net interest margin is still a revenue model. The challengers have just realized that. That's why they're putting these fees in place, and that's why they're trying to grow their balance sheets. Marcus is a great example of that. I think David probably could talk to it a bit better about that report that they've just released. So there's his plug for later. But I think everyone will just focus on what they're good at. I think you will see some fall by the wayside as there's a more focus on profitability, on unit economics. And I think what we'll end up with is that rebundling, as David was saying, sort of Fintech 3.0, of where we start to see that aggregation of key market players together, providing a best-in-class product rather than master of none,
I definitely agree with that. I think there's a we sort of say on the product side, I mean, like, is this company a feature or is it a product? If it's a feature, it's likely going to be bundled into something else or acquired by somebody, rolled up into a bigger play. No customer wants... Ali, you're a weird human being to have that many current accounts. Like, nobody wants that many current accounts, and nobody wants to be one of those crazy people at the till with like 15 different coupons kind of going like, well, what's the best card I use for this one? You want that just done for you, don't you? Like, nobody wants the hassle of that, you know. So I think the likelihood is that the technology for me increasingly becomes a differentiator in the short term, but commoditized in the long term. And that's really the way that it should be, right? You know, to your point, Alex, no fintech is like, where am I going to put my data centers? Like, you know, actually, like, the cloud's a thing. Let's use that. It's really quick and really easy to kind of get there. And actually, like, the cost of doing it, the operational ability that unlocks for you is fundamentally different than it would be. You know, imagine going to a VC and asking for, like, you know, another 3-4 million to put 4 data centers across the UK. It would just be mental, wouldn't it? And that's really where we are with the advancements around technology. So, but I think that will increasingly happen, and higher and higher and higher up the stack, if I'm honest with you, because at the point where the differentiation might start being people again, you know, actually the difference between a premium service and a free service might be your access to a human being. Then I think that, you know, that technology layer just becomes really commoditized. It is difficult for other geos. You know, the problem, and Alex, you'll know this better than I will, working with you know, Icelandic banks, but for any geography that's small, the infrastructure, the capability, the things that you have to put in place when you're doing it with scalable technology is no different really for a small bank than it is for a gigantic bank. You know, that's the point of technology. It scales really efficiently. So for those smaller geographies, I think increasingly relying on, you know, bank as a service, bank as a platform plays. And I think, you know, like you say, Alex, people like Goldman Sachs have really done a great job in that space. It did take fundamental cultural reform there. You know, shout out to Bo Hartman, who put in place all of the technology that underpinned Marcus there. But that wasn't just a technology play. That was like a fundamental cultural transformation at Goldman Sachs that started like 4 years ago, 5 years ago, that we're really seeing the fruition for today. The difficulty for the other banks is, like, if you're searching for relevancy in a world that's dramatically shifting and you're 5 years behind the person who's done it really well already, then how long can you wait? Because, you know, there's already players like Rails Bank and, you know, Solaris Bank and all these other players in the market. And if it's not smaller banks trying to commoditize their technology, it's retail players or technology players, or, you know, we did work with Grab over in Singapore, you know, like transportation players getting into financial services. I think increasingly, as you said again, Alex, earlier on, like, anybody can be a bank, and actually, like, from a banking perspective, it's reasonably irrelevant where that is. So it's exciting. Like, it is an exciting time. I think, you know, if we sort of fast forward from the inevitable crisis that we're having today, then there's a lot of silver linings as well.
Yeah, I think, like, sort of the final note on that is that ultimately, you know, the end user wins. Whatever happens, like, we're all striving to deliver better products. You know, on our platform, we realize that we can't just deliver what, you know, GPS or Marketo, they've done a great job up until today. Like, we can't ignore that. We'd be naive to. And what we have to do is evolve through and beyond that in terms of product offering, even to become relevant. So I think the other thing is now what's expected of us as a young business is better, which means that our partners, you know, ultimately deliver a better product to their consumers. So I think it's a very exciting time. And pandemic aside, I think actually we're showing huge resilience as an industry. And we shouldn't sit here and moan about Trump or Biden or whoever, you know, or the pandemic. You know, actually open banking and government disbursements, or whatever that chooses to be, you know, in the next 12 months, we're pretty well geared up to manage everything as we work as a team, and, you know, partnerships are just going to be ever more key with that.
Very well said there, Alex. Well, guys, thank you so much for taking the time to speak with us today. Alex, where is best to find out more about yourself and Tribe?
Tribe Payments, or at Tribe Payments on Twitter. Let's do that. Let's be modern.
Twitter. Are you not on? I completely forgot what TikTok was for a second. Are you not on TikTok, Alex?
No, luckily my children are too young for that just about now. So.
And how about yourself, David?
You find me best at LinkedIn, really. Just David Brear on LinkedIn. If you want to drop me an email, david@11fs.com.
Brilliant, awesome. Thank you very much, guys.